Hello, welcome to European Open Briefing for Tuesday, January 29th. I'm Rafi Bayajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we've got quite a bit of a risk off in the financial markets this morning. It comes after the US authorities filed charges against China's Huawei, China's biggest telecom company. So that has soured risk sentiment ahead of those all-important trade talks between the US and China due to start on Wednesday. Dollar, though, which usually benefits from trade tensions, hasn't this time round. That's because analysts are expecting the Fed to be dovish at tomorrow's meeting. So the dollar index is still on the back foot, down by 0.1%. Dollar yen also slightly weaker. The euro is slightly up this morning. We did see more comments from Mario Draghi yesterday at a parliamentary hearing at the European Parliament, but he didn't add anything new, so there was much reaction to his remarks. Sterling is steadily drifting lower ahead of the votes in UK Parliament later today. Having a look at the risk-sensitive currencies, the Kiwis are the biggest gainer this morning, up by more than 0.4%, though there's nothing particularly new regarding the Kiwi that's driving those gains. The Aussie did fall sharply early today on poor Australian data, but it has since recovered following some remarks by an RBA board member. Gold prices are touching fresh 7-month highs, mainly on the back of the weaker dollar. Oil prices recovering slightly after big falls yesterday, due to those big increases in oil rig count we saw on Friday out of the US. The US has imposed sanctions on one Venezuelan state firm, so that is providing some support to prices. Having a look at the dollar yen now, we can see it's off those highs from mid-January when it was trading around 110 yen. Analysts are expecting the Fed to possibly signal flexibility on its balance sheet runoff, which has been on autopilot. That could boost markets, especially equities, if the Fed signals such a possible move. At the moment, the Fed is automatically steadily reducing its balance sheet portfolio, and if it announces any changes to that, for either pausing it or saying that it's going to hold larger reserves, then that could potentially boost markets, and that is also weighing on the US dollar. But we do have an increase in trade tensions after the US went ahead and filed criminal charges on Huawei and its top executives for violating Iranian sanctions as well as stealing technology from T-Mobile. So that could complicate talks due to start at a higher senior level between the US and China tomorrow. The more immediate focus, though, will be on the US Consumer Confidence Index. That's due at 15 hours GMT. Looking at sterling now, we can see it's holding above 1.31, but well below the 1.32 level it broke on Friday. So MPs in the British Parliament will vote on Theresa May's Plan B, as well as on various amendments submitted by MPs. May is actually urging her party to back one amendment, which is for the backstop to be replaced by an alternative arrangement, though there's still a few Conservatives not in favor of this, or not in favor of May's plan altogether. So it's unclear whether or not this amendment would pass. If it does, it would give Theresa May a stronger mandate to demand from the EU changes to the backstop. Other amendments include extending Article 50 and for no deal to be ruled out. So those votes will take place around 19 hours GMT, and we could see quite a lot of volatility for sterling if there's any surprises there. And a quick word about the Australian dollar, because we did see some very bad business confidence data out of Australia, which saw the Aussie plunging below the 0.71 level against the US dollar. Plus, of course, we do have that risk of sentiment. But we did then hear some remarks from an RBA board member, Ian Harper, who still insisted that the next move by the RBA will likely be up. So that's it from me. Thank you very much for watching, and have a great day.